Hello, everyone. I'm Emily Patsy. With me today is Hillary Holmes. She is co-chair of capital markets at global law firm Gibson, Dunn and also a recent speaker at Oil and Gas Investors Energy Capital Conference. So today we're focusing our discussion on energy ESG, a topic that feels unavoidable these days. Many across the oil and gas industry have increasingly been highlighting their ESG initiatives and launching new strategies focused on ESG. Now, Hillary, I wanted to start our discussion on ESG off by getting your take on what is key for an oil and gas company looking to further advance their ESG strategies and reporting.
Yeah, thanks, Emily. So two things are really key. One is to appreciate that ESG is just part of being a U.S. public company, especially in the energy industry now. So embrace it and get on board. The second key is to embrace it in a way that works for your particular company. So the ESG is not a one-size-fits-all strategy. It should be tailored to the particular company, its particular situation, its subsector, its size, its investors' demands, and so forth. So it's a very bespoke strategy with respect to each company. And I like to advise clients to just step back instead of attacking ESG as a separate strategy from their business strategy. Instead, think about ways that ESG can be integrated into the business strategy to really add value. For some companies, that'll focus on increasing access to capital, which we'll talk a little bit more about. But for some companies, it could talk about improving governance or better management of human capital or better connection to local communities and customers. And all of that ultimately is intended to drive increased profits. So there is a way to have a solid business strategy focused on making a good profit and integrate ESG into it to support that strategy.
Yeah, Hillary, you mentioned that the capital side, turning to money, a big driver in the ESG movement has been investors. Can you talk now more about capital markets? Where is the money, and how do ESG initiatives fit in?
Yes, of course. So there's a lot of capital raising going on with respect that's tied to mostly the E in ESG, the sustainability or environmental aspect of it, some tied to the social aspect as well. So there is capital available if you embrace the E or the S with respect to some of the capital markets products that are tied to those parts of the acronym. Also, investors are just demanding that companies pay attention to ESG and provide specific goals with respect to their ESG strategy and provide regular reporting on how they're achieving those goals. And investors are, it's sort of the old golden rule of, the person with the gold makes the rules. The investors have the capital. If companies want to get access to it, they need to be responsive to investor demands. And the current investor demand is for increased ESG at the companies in which they invest. 1 in every $3 or $4 under management in the US is tagged specifically for ESG only investments as it's defined in different ways. And then even the other, $2 or so is tagged for companies that maybe don't have a specific ESG type of business, but provide a dedicated commitment or demonstrate their commitment to ESG initiatives. So companies that have specific ESG track records and success with those track records will be more attractive to investors and have greater access to capital.
So I just was curious, whenever you mentioned that a certain number of dollars are tied to ESG, investment dollars are tied to ESG. Is that new? Is that growing? Or is that something that you've seen for a while now?
Now, that's certainly growing. And it started a few years ago, but has increased in size. And one way to track this, definitely in the last 3 years, we've seen just a massive growth in the commitment to ESG with respect to capital investment. And then over the course of the last year with the pandemic and other social events, a lot of that commitment has increased. Investors who didn't have specific ESG tied funds or banks that didn't make statements about not lending to companies who didn't have ESG initiatives, there's a significant increase in the number of such funds and lenders over the course of the past year alone. There's a whole capital markets segment based around ESG, especially E and S products. And that capital markets sector has grown tenfold since 2018. I mean, we're up to about $725 billion. And the US is the part of the world where that's growing the most, because we're probably a little bit behind where Europe was a couple of years ago. So once the ESG initiative made it over to the US, it's just caught wildfire.
Yeah, it definitely seems like that. You know, and while on the subject of, you know, capital markets and ESG, a recent development I feel like we started to see emerge is, you know, sustainability bonds. I'm not sure if everyone is familiar with it yet or what those are. Hillary, so could you explain what a sustainability bond is and its origin?
Yes. So sustainability linked bonds are regular unsecured or secured bonds, but they have a special feature in the indenture. So the special feature is that the issuer commits to achieve a certain sustainability linked performance target by a certain date. And if the issuer does not achieve that target by the certain date, then there's an economic consequence. So typically the interest rate will increase by a certain number of basis points at the point at which the issuer doesn't reach the target. In one recent issuance, the bonds actually continue to have their interest rate increase year after year after year until the target is reached. So very ambitious. There may also be covenants that adjust if the issuer does not achieve the sustainability linked performance target by the certain date, like, you know, limitations on their ability to repay the bonds and things like that. And sustainability linked bonds are a relatively newer product. There have been several in Europe and in Latin America. There've only been about 3 in the United States. And what I like about them is that they provide an opportunity for companies in all different industries of all different sizes, both publicly traded and privately held, to demonstrate their real commitment to sustainability as part of their business strategy. So they're really putting their money where their mouth is. And so that helps companies do 2 things. One, avoid the accusation of greenwashing, you know, just general sustainability reports. You know, ESG is important to us, but, you know, what's really behind that? Like, how are you really demonstrating that commitment? Agreeing to pay a higher interest rate if you don't hit a sustainability linked performance target is a way to very concretely demonstrate your commitment to sustainability. And then second, it can provide a cheaper type of capital to some of these companies. So there is so much demand for ESG friendly investments and a disproportionately lower amount of supply than in a basic, you know, law of supply and demand. It means that when you as a company issue these sustainability linked finance products, you're often going to get a better pricing, lower interest rate, maybe even better covenants than you would if you just issued a regular way bond. So it's a really interesting product. It's very, like I said, new. So there's no cookie cutter or limitations basically on what it looks like. So the products so far have been very, you know, bespoke and tailored to the particular company and its particular strategy. And sometimes the sustainability linked performance targets, you might be wondering what those are typically. It really varies. A lot of them are tied to something general like reducing emissions or, you know, reducing some type of carbon footprint on a quantitative basis. It's always a quantitative target. But they may also be tied to the actual business strategy, such as like reducing packaging. We worked with an oil and gas company that committed to increase its percentage of recycled water that it used in oil and gas production. So, you know, it's a very flexible product, and I think that it can be integrated very well into any business strategy. You don't have to be a wind company in order to use these products.
Yeah, and my next question is kind of along those lines. I know you mentioned that they're an opportunity across industries, but I think, you know, when people hear about sustainability bonds, you know, I feel they might not relate that to the oil and gas industry. However, as you said, companies in the industry have already been successful in this area. I was wondering, on that subject, can you tell us more about how oil and gas fits into that? What opportunities are there for oil and gas companies and sustainability linked financings? And do you see that as a possible area of growth for oil and gas companies and, in terms of financings?
Yes, I think it's absolutely an area of growth in terms of access to capital for participants in the oil and gas industry in all different sectors. I think that, a director of a company in the oil and gas industry would be remiss if they did not ask about sustainability related financing opportunities, because it is another one that is now on the table that wasn't there basically 6 months ago. So, we should consider all options, particularly if the capital would be cheaper than if you did a regular way financing. So, a lot of companies are looking at these products, and they're not just limited to sustainability linked bonds, which are the newest. There's also green bonds. Green bonds are just a use of proceeds bond. So it's a regular bond like you see all the time, but the use of proceeds is tied to sustainability in some way. And then there's also social bonds, where that's the same. It's a regular way bond, but the use of proceeds is tied in some way to a social purpose, typically some type of community contribution. And then there's sustainability linked loans, which have probably been around the longest. And that's an evolving product as well, but that's, a regular bank loan, but the credit agreement will provide for certain provisions related to sustainability linked performance targets and changes in interest rate if the sustainability linked performance target is not met. But also some of those loans have benefits to the borrower if the target is met, like the interest rate goes down if the target is met, and other benefits like that too. So you can see this could be a very attractive way to raise capital. And I do think that it is available to many, many participants in the oil and gas industry, and it's time for us to start taking advantage of it. A simple example would be companies in almost any sector of the oil and gas industry can find ways to reduce emissions or carbon footprint or make contributions to local communities or their human capital. And those can, if they're crafted correctly, fit within the framework that qualifies for green bonds, social bonds, or sustainability linked bonds. There's an organization called the International Capital Market Association that puts out frameworks for these products. So anybody, you can see that on the internet, anybody can read those frameworks. And I bet any smart management team in the oil and gas industry could find a way to make their financing fit within those frameworks.
Thank you so much for that insight into sustainability linked bonds, and that kind of type of financing is definitely, it feels like a new area. Definitely for me, I haven't, except for like maybe this year, so maybe this year only, I haven't heard of them until recently. But as we wrap up this discussion, I wanted to get your final thoughts on ESG. Within the past year, as we discussed, the spotlight on ESG has seemed to only brighten. Hillary, in closing, what is your advice to oil and gas producers on adapting and navigating this ESG world?
So my advice would be to embrace it and find ways to leverage ESG to increase your profitability and support your overall business strategy. And that includes considering how ESG can be leveraged to provide access to capital, attract new investors, and obviously keep the investors you already have.
Thank you so much, Hillary. I really appreciate, again, you taking your time to share your expertise with us today. I wish you and Gibson Dunn all the best, and I hope to speak again soon.
Thank you, Emily.
Thanks.
For more Hart Energy videos, follow our social media channels.